If you're watching the stock market for a signal about who the next president will be, I have some news for you. For those paying attention, the S&P 500 finished lower over the period measured from July 31st to October 31st. When that happens in election years, it isn't a great sign for an incumbent president. This is according to Sam Stovall, chief investment strategist at research firm CFRA. Stovall's presidential predictor has found that when the S&P 500 has risen from July 31st to October 31st, going all the way back to 1944, it typically corresponds to a presidential win by an incumbent party, while a decline in that period signals a loss for the incumbent. Using this measure, when the S&P 500 is up from July 31st to October 31st in election years since 1936, the incumbent party has won 85% of the time. But when the index is down during this 3-month period, the party in control of the White House has changed 88% of the time. And so on Friday, the S&P 500 finished at 3269.96, leaving it just barely below its July 31st close of 3271.12. That means maybe a Biden White House. But with the margin so thin, I think anything can happen. But rather focus on the election, let's take a look at the markets to see where they may go from here. And we're going to look at two charts, beginning here with the 6-month daily on the spiders, the SPY. And you can see here the congestion of the last 4 days of trading, which may indicate a bottom. Now, go back here, same sort of congestion. That failed. Came down here, and this succeeded. So we're not quite sure here, but once we get to the weekly, I'll show you that we're still not out of the woods. Moving on down here into volume, not going to tell us much. Into the MAC, that's not necessarily going to say much to us either because of the separation between the slow line and the fast line. It could bottom here, but we could have some sideways trading. Moving on down here into the histogram, you can see that this bottom there turned into some sideways volatility before it hit that bottom there and went on up. So we do have a day of improvement, but I don't know if that's going to be enough for a bottom to set in. Here in the price rate of change, there's also a pretty big difference between the fast line and the slow line. Now, this can, such as here, move up fast and very quickly, but I'm not going to say that that's going to happen. We're going to have to wait. Now, into the RSI, this does show perhaps a bottom here. It's moved on up here, trying to head to that 50 or midline, but it's got a ways to go. So here into stochastics, that is also showing good signs of a bottom, but that also happened at this point in here. So let's not get carried away here yet. Into the Williams, that also does show it wants to bottom and head on up. It's already moved out of that oversold territory and it wants to head on up. So we really have a mixed bag here. I think there's some pretty good signs that we may have seen the bottom, but I'm looking at more of a long-term trend, and I think the weekly is saying something a little bit different. Let's go there. And now we're looking at the 2-year weekly chart on the spiders, the SPY. And we can see here the top in the market at that point, we did not exceed that level here. So we have a slight downward trend line. Now we're riding the 20 EMA. Can we reflect off and come back up here? Perhaps so, but we need to break through that trend line. Now let's see here into the MAC. We'll also have a slight downward trend line here. Not a very good line, but you get the idea. Can we turn and move up and break through that? That remains to be seen, but coming up from below is always difficult. You can see the same thing here with the price rate of change. Nice trend line heading on down. So are we going to go up and break through? We have to wait. Many of these oscillators are showing the same thing. Downward trend line there, but even a downward trend line all the way back to here. So 2 trend lines we need to break through. Again, stochastics, We're below that 50-year midline. Doesn't look to have any kind of turn in it yet, but we'll have to wait and see. Also, the Williams did come all the way down here. It had a slight bounce, but we can turn into a downward trend very easily like it did here. So we need to be cautious, especially during this election period, just to see what happens, first of all, with the election, but let the market evolve. I think it's going to have some difficulty in getting above that trend line. And if it has some difficulty, then that can turn into a bigger sell-off than we've already had. So too many questions. So stay on the sidelines. And for today, that's ChewDog Charts. And vote for me. Thank you.